This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Thursday, August 21st, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at September corn up 2 3/4 at 382 3/4. September soybeans were up 3 3/4 at 1018 3/4, and September Chicago wheat was up 4.5 at 510. This morning, weekly export sales. We had small cancellations on the old crop for corn, 27,100. Real solid on the new crop, 2,860,000 for new crop corn sales. That's well above the upper end of the range. They were looking for 2 million. Soybeans, same story. Small cancellations, 5,700 on the old crop, all moved to the new crop there. 1,142,600. So again, above the upper end of the range. Looking for 1 million there on the bean side. Wheat, lower end of the range, 519,800 for the week. Meal sales, 45,700 on the old crop. New crop in line, 176,200. And wrapping up sales, oil, 2,600 on the old crop, none for new crop, and that was as expected. Good morning, guys. We also had yesterday afternoon, evening, we got Pro Farmer Crop Tour data. We'll run through that real quick here. Illinois corn, 199.57. That was down 2.2% from the previous year, but about 3.5 bushel higher than they had for the 3-year average there. Looking at Iowa, they got a number of districts. So the Northwest district came back 197.8. That was up 12% from the previous year, and the 3-year average of 180. Looking at District 4, which would be the west central portion of Iowa, came back at 207.25. That was up 5.8% from the previous year. 181.7 was the 3-year average there. And District 7, which was the southwest corner, came back 195.03, up 1.8%. From 24, and well above the 3-year average of 183.38. On the soybean side, Northwest District 1 for Iowa was up 15.3% at 1279.25. District 4 in the west central part of the state up 9.7% at 1376.15. And looking at District 7, which would be the southwest corner, was up 14.3% from a year ago at 1562.54. Illinois soybean data was up 4.2% from the previous year at 1479.22. So with that, good morning, guys. Justin, a lot of data. We're going to get the national yields estimates from Pro Farmer tomorrow. Obviously, real good week for corn sales. So I guess, what are your thoughts as we kick off the day?
I guess starting with yields, I think it's kind of in line with what we've been hearing. I mean, maybe I'd say Indiana, Ohio, maybe came in higher than what we've been hearing. Illinois, I think, jives really well with what we've been talking about. So not surprising. I mean, it was a pretty lofty estimate by the USDA for Illinois for how good last year's crop was. So that is, like I said, in line with what our clients are saying, what we're seeing on our farm. And you're doing kernel counts. So in my mind, the big question is, how we finish off and what the kernel depth is. So I do think some of those states in the East where it's been drier, more stress, using the same, I get why the methodology is using the same kernel assumptions, but, we all know that if you have a really good finish, you have, high test weight, deep kernel depth, vice versa if it's not. So I do think the East comes down. The West obviously looks good. See how they finish. Pod counts have probably been the most, I'll say, surprising thing, just how strong they are, in almost every area. So, we have to have, enough moisture to finish them, so these areas that have gotten really good rains here, in August. I think we're gonna have really big bean crop. Iowa's got good pod counts in the West. It looks like it's drier. Is there enough moisture there? It sounds like it to finish it off. So I'd say soybeans probably, in my opinion, just right now, might have the best chance to hit the government number or even go up a little bit. But that's just kind of anecdotal. The demand on corn, I mean, it's great to see. It makes, we've got a big, huge book of business on actually, but we have giant number written down. So a lot of buffer in there. We, even get anywhere close to what the government's writing down, we have to see these numbers continue for a long period of time. So it's what you would expect in a supply bear market. It's encouraging to see really good demand. Corn's been acting fantastic, for such a shocker report as we've talked about. I think getting at some kind of important numbers here. We were talking before the show. You take out, 410 for a lot of numbers there between 410 and 415, the last kind of 2 weeks worth of highs. So if you get up into those areas, I do think there's still a lot of corn that's got to be priced. Either way you slice it, it's going to be a really big corn crop with 97 million acres. So whether you want to pencil on a 182 or 189, it's going to be a lot of bushels that are a lot's unpriced. So I do think 20-25 cent corn rallies, are going to be hard. They're going to be sold, for the next month or so. Hopefully we continue to churn higher, but I think those are going to be really tough areas to sustain, at least, go as we go through harvest.
Very good. Let's unmute Ben and get some thoughts from him for the day.
Got it. I'm on
Got
that.
it.
He's been stripped of his power.
That's right. I got it.
His muting power.
I kind of agree with Justin. I think you still, regardless of, it's great that we're doing business. I don't think we need to run away from it right now. We'll still have some competition out of South America. They're above the market with us, and they'll be there to sell it as well. And we haven't, by volume, a tremendous amount, whether the yield is 183 or 190, we have a tremendous amount of volume coming at us in the fall. And, I don't think it's likely that we really take off into that. And, but we stay down here, we continue to do business. Maybe you got some things going your way as far as yield reduction. I don't know what the precedent is here. This was the first year that we incorporated acreage changes into the August report. You wonder how that process, maybe there was some, with all the changes that have happened in the FSA world in the last couple months, it makes you wonder if there might be a chance for a revision later on for that. But love seeing the great demand in corn. We gotta keep garnering that demand because we do have competition, and hopefully it'll lead to some more positive price action in the future.
Very good. Dustin, we got a crazy amount of in the money puts that are going to need to be handled here by Friday. Maybe share a few thoughts on market action and kind of where the market's set up here right now.
Yeah, so Friday's option expiration for CBOT products, so September corn. And we had, as of yesterday's open interest run, 96,900 in the money puts as of today's price. And the average strike is 409.88. So that's it's a lot of bushels, 500 million bushels. You just think about the makeup of who has options, a lot of short options. We typically think of market makers that are going to be more neutral, right? If they're holding a short put, for example, they may be holding a short futures with it. And the position holders are those that wanted to buy the insurance in the first place. Growers, speculators. It's not always the case that that's the way it's set up, but it's often, long option holders are going to be the position holders. So 1.3 billion bushel carryout. What percentage of this 500 million bushels is because it's trying to protect old crop corn? In my view, not a big percentage, right? A lot of growers try to get coverage just for the summer, that they'll know their crop size by the end of August. So how are position holders going to respond? Are they going to take short September futures and roll them to December? Or are they going to cover and just take the money out of them, knowing that they're near insurance levels? I think that could explain a lot of what's happening right now in the recent support in corn following the report, is that you're coming up to where everyone's having to make a decision on these options. And it's been a significant amount because we're, 30 plus cents below that 100-day moving average. Next week, we've got a full week into first notice day. So you have all those commercials that need to roll growers before first notice day. They have 4 days to do it. So I think that's going to be potentially where some weakness shows up again, Monday, Tuesday, Wednesday, in just my opinion.
So just to add to that, Dustin, a lot of time on this show, we talk about, kind of the underlying crop insurance put and just how these, the reason we talk about that is coming from trading world. You look at these big open interest in the market tends to gravitate towards kind of that average put strike or call strike, right? Because there's so much volume there that it naturally, it's not some, it's like the invisible hand of the market, right? It's people, on the report, had 20 or 30 cents in a trade, and that's being eroded away. So they're, getting out of it, covering it, and it's kind of a self-fulfilling prophecy. As you get all these different traders kind of evening up, if you will, as we go, and that's, so if you look at September options, you look at December options, you look at, we'll call them November options really for crop insurance. So you have these big factors at play as the market kind of figures out where all that is. So, I think as we talk about that, you have these, you kind of have to keep all that stuff in mind. It's like when those expire, you'll have a gap really between there and I'll call it crop insurance. So you basically have a September options that go off. The next one will be November. So you'll have really about a 6-week window with the crop insurance put, if you will, right? Where the market will kind of trade around that as people kind of fine tune yields and what position they want to have on when crop insurance expires. And then December is obviously the next big one. So they certainly do play a big role, I think, because they're such a big part of the market makeup.
I agree. And, talking about like crop insurance, this is a year where we're talking about above trend line yields projected. So it may not work out this way, but you just take your standard 86% SCO or 85% RP, the crop insurance put floor, if the grower hits this APH exactly, is right around $3.99 a bushel for an 85% policy. You see years like 2014, we dipped way below that 85% mark going into the end of September, and we hit the low, and we rallied substantially through that in the month of October. And a lot of people thought that was related to some nefarious thing, like you're saying. It's like an invisible hand trying to destroy those hundreds of millions of dollars of insurance that was given up from that rally in 2014. I think it has a lot to do with just the market participants themselves. It's self-fulfilling. So something to keep in mind, if you get into, like, let's say next week does become a bearish situation, we go back down to touch the lows, you're going to start to see a number of projected payments depending on the policy that you purchased. But certainly anyone with SCO could be doing the calculation to see if they're likely in a payment. And of course, ECO is the 95% policy. I think a lot of people will be in ECO payments this year.
Yeah, and that's the difference, right? Like if you look at, it's easy to go look at open interest and say, oh, here's how many in the money puts are on September, right? It's a flat strike. When you talk about crop insurance, everybody's got a different strike price. Everybody has a different put floor, right? So that's the tricky part, is how many people have a 95, how many people have a 90, 85, all the way down to, 50%, right?
And
so,
too.
And then what's their yield, right? So all those things are adjusting, right? So some people have, 450 puts, if they have really, really weak yields. Some people have 320 puts, right? So there's it's a much bigger position when you look at crop insurance as a whole, but so many factors go into, determining where those levels are. So a lot trickier than just looking on the board and seeing what open interest is in $4 puts, for example.
Yeah, and we could get into like the marketing your average put as well this year too. Like everyone's got either PLC or our county this year. and they're strong numbers. So that's another put, but it's a cash market put, and it's over the course of the marketing season. But still, nonetheless, we're talking a lot of guys might be looking at north of $50 an acre payments projected right now. That is going to probably be needed and being like accounted for in how we get to just survive this year. So,
Yep. But that does take, I think between that and wide, which is the job of the market when you have massive supply, between that and huge carrying, tons of incentive to store, tons of incentive to not necessarily price when flat price is way below those levels. So again, it's just, I think it's a culmination of a lot of different participants, a lot of different scenarios that naturally make things like this happen.
Right.
Very good, fellas. Just quickly here, let's move over into livestock. Rye, new highs for cattle. Hogs are chopping around. And if you could, please address demand on the lean hog side and what export sales data showed here this morning. Our good friend Maximilian was inquiring. So with that, Rye, why don't you share some thoughts?
Yeah, well, can't stop, won't stop in cattle. Just new highs across the board. So that's going to continue. I think just you saw a little bit of cash trade yesterday, 245 in the north, 385 as well for dressed, and then a little bit of 237 in Kansas. So I think the market's going to wait and see what Texas does. Obviously, we're starting to get into that overbought territory. We got the cattle on feed report on Friday. I think everybody's still leaning pretty friendly going into this one just because of the potential dip in placements. So we'll see what that says. I think naturally you're going to see some profit taking here from anybody that's just been spec long, just waiting to see what kind of cash was going to do. And then we'll just move on to next week into the report. So I think it's going to be kind of a volatile trade going into that, but mostly going to be, the focus is going to be the report kind of next week. And the hog side of things, just everything's kind of languishing right now, still kind of choppy trade. Cash was a little bit firm, still kind of up on the week, and carcass was firm as well. So, I mean, we're just kind of in this zone where I think naturally seasonal tendency is to trend a little bit lower here, just overall, but we've already got quite a bit factored into the back end of the market. October's are at 90 and cash is sitting at 109.80. So I think we've priced in kind of that kind of negative sentiment right now. It's more so just like how the performance of carcass and cash is really going to hold up just in the interim. And as at least on the export side of the market, I mean, it seems like things are kind of quiet here. We're down about 9% on the pork side of things at 19,200 metric tons. And overall, it just seems like that's kind of a weak point right now. Obviously, Mexico is the big buyer this week at 5,300 metric tons. And would like to see the export market kind of pick up here. But overall, it just feels like demand is just kind of meh as it were right now from the export side of the market. So we'll see if that tends to change, if we see any big dip in cash or product to kind of spur anything for right now.
Very good. Appreciate the update there. We'll get a quick readout here. September corn up 1 3/4 at 381 3/4. Sep beans are up 4.5 at 1019 1/2. And September Chicago wheat's up 4 at 509 1/2. Again, September grain options will expire tomorrow, so get in touch with your consultant there if you need to reevaluate your position. Also, tomorrow, be sure to tune in. We got Fun Fact Friday. Never know what you're going to get, so be sure to catch out the show there. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with the AgYield. So again, thanks to everybody that supports us on a daily basis. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.